This is Greg Gallagher for G3 Investors. We're going to take a look at the 2000 to 2002 .com crash. This is an educational website, and these are the disclosures. Stop by my website at g3investors.com. Okay, this is a stock charts weekly candlestick chart of the QQQ, which is the Power Shares NASDAQ 100. And we're looking at the .com crash. We're going to back test it, trading the G3 system with a $100,000 model portfolio. The price triggered at $36 right here. We bought 300 shares at a cost of $10,800. We set the stop loss at $6. Our risk was $1,800, or 1.8% of our $100,000 portfolio. As you can see, the market was on fire here, and it just went straight up virtually until this point up here, where it started topping out. We had a 1, 2, 3. We got stopped out at that spinning top right there at the price point of $100. It reached a peak of 107. Our stop loss was 6, but I gave a little bit of a leeway because things were really getting wild and crazy back then. So we stopped out at 100. Our net proceeds were $30,000, 300 times $100 a share, gain of $64 a share, $19,200 gain, 178% on our basis of $10,800. Now, because of this big down bar, red bar here, that's a massive 1 week move down. I would look at that bottom as the point of, once there's some activity out here, like this little flag formation, or where we go up, but none of these peaks reach this top here. So this thing is looking really, really scary. And when it comes back down here and hits that bottom, I would go short at that position. And that, looking at this green arrow, is at $70 a share. So the G3 portfolio would short using the SQQ. That's the inverse of the NASDAQ, the 1 times inverse, and it's $70. And we would have bought 300 shares. And that would have cost us $21,000, which is still not utilizing all the $30,000 we made on the way up. And we'd have to set the stop loss at $750 from this top up here, and risk $2,250, but it's still only 1.7% of our $130,000 portfolio, and that would be the $100,000 we started with and the $30,000 we made. I'm assuming I didn't trade anything else, so that wouldn't have been true, but we're looking at the NASDAQ alone. Now you notice this 50-day moving average here is a 50-week moving average, this blue line here, and once that starts down, I will not go long until it gets above that, because that is the indication to me of a bear market. Okay, and this is definitely a bear market. Okay, and so it just goes down, 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 and motors around in here. I could have done some short-term trading here for these. I probably did on the long side, but the short that I would have had out here, I would have just stuck it out here. And you use the short to hedge your portfolio. If you short properly, in my book, you're not taking a trade. You're just saying, hey, I'm hedging this position, so I'm going to buy this short and hold it as it goes down, down, down. Now, right here in this little red area, it never crossed over and stopped and closed above it. So it never got to where it was living above the 50-day. So there's no reason to exit the short trade at that point in time. I'm looking for capitulation, and we weren't getting it. Okay, but as it continued to go down, come down here, and we got a higher high, a lower low here, but we got this, and when we went above this little peak right here, that's when I exited the trade. I think it was at 23. So on the way down, we had a gain of $47 times 300. That's $14,100, and 67% return on our $21,000 investment. And So you add the 100,000, the 30,000, and the 14,000, we've got 144,000. Now, something that I do when I go short, I usually trade the 2 times inverse. So there's a QID, which is 2 times the inverse. So this 14,000 here might have ended up being, 25 to 28,000, depending on how the trade would have progressed. Okay. What about Bob? The Bob buy and hold guy. That's what I'm going to call him. Well, his $100,000 portfolio is now down 70% from an all-time high, because remember, he was fully invested here. He's not a trader. So he's rode this all up, and he was probably, thinking that the sky was the limit at this point in time. And living through this is not easy. I worked at Wellcraft at the time. I was a CFO. There were several executives on the executive committee, including the president of the company, and they came in here after 2000. I got out in 99. I even emptied my 401k into cash in 1999, because the .com companies were coming out. They had no revenues, and they were trading at multiples of their sales, not multiples of their PE. It was just insane. And every day they'd come in and say, "Are you getting back in this market?" You have a big down day like this. My answer was always no. It's crazy. Getting back in the market? Nope. Getting back in the market? Nope. Getting back in the market? Nope. 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 About right here, where we went short, that's when they were like, "Oh dear," all the way down. So what did Bob do? That's my composite guy. He probably got out down here somewhere for a 70% loss. At least that's my bet. So what's Bob doing right now? I think Bob's saying, "Bubble? What bubble? Buy and hold forever, baby. Just look at how good I'm doing. This is not a bubble, and neither is this one." Well, I'm not saying it is yet, but the NASDAQ is now over 7,000 and still headed higher. It's getting pretty close, folks. That's my opinion. And the wise people of the world will be setting stops and following G3 investors. This is Greg Gallagher with G3 investors saying good luck, good trading, and all the best for 2018.